Most business credits you see on the EA exam aren't claimed as one big credit. They're bundled into the General Business Credit, or GBC. Think of the GBC as a container that holds many separate credits. You compute each credit on its own form first. Then you bring the totals together on Form 3800. On questions, watch for that flow. Credit form first, Form 3800 second. Here's the framework they love testing. You don't calculate the GBC from scratch. You calculate individual credits form by form, then aggregate them. For example, you might have a disabled access credit, a work opportunity credit, or other credits. Each has its own eligibility rules and limits. Form 3800 is the summary and limitation form that pulls them into one number for the return. Next, the non-refundable rule. The GBC reduces income tax dollar for dollar, but it can't create a refund by itself. So if the limitation says you can only use part of it this year, the rest doesn't disappear. Also, a classic trap. General business credits do not offset employment taxes or payroll tax liabilities. If you see a question hinting at use the credit against payroll taxes, that's usually a no. So what happens when you can't use the whole credit? You get carryovers. The general rule is a 1-year carryback and a 20-year carryforward. On the EA exam, they'll test the timing and the ordering. The ordering is FIFO, first in, first out. That means you use the earliest earned credits first, so older credits don't expire while you're sitting on newer ones. Put it together like this. Compute each credit on its own form, aggregate on Form 3800, apply the non-refundable limitation, then carry the unused amount back 1 year or forward up to 20. And remember, the no payroll tax offset rule for the GBC. If you keep those 4 ideas straight, you'll pick up easy points on business credit questions. Marcus owns a barbershop with 10 employees. In 2023, his gross revenues are $900,000. He spends $24,000 on modifications to provide restroom access to customers with disabilities. What is Marcus's disabled access credit? The choices include no credit, $5,000, $24,000, or $12,000. Think about the credits cap and how it's calculated. The correct answer is $5,000. The disabled access credit is generally 50% of eligible costs over $250, but only up to $10,250 of expenditures. That creates a maximum annual credit of $5,000. A tempting wrong choice is $12,000, which sounds like half of $24,000, but the credit is capped. Ethan is a securities broker-dealer operating through an S corporation. He's single. In 2023, his taxable income before any QBI deduction is $268,000. Is he eligible for the Section 199, a 20% QBI deduction? The options range from yes to partial, to no, to not enough information. Think about SSTBs and the income phase-out. The correct answer is no, he is not eligible. Brokerage services are a specified service trade or business. An SSTB, with taxable income of $268,000 as a single filer in 2023, he's above the SSTB full phase-out range, so the QBI deduction is fully disallowed. The tempting wrong answer is partial deduction, but once you're past the top of the SSTB range, it drops to 0.